Today's episode is brought to you by Mazars.
SoundCartel.
Last Tuesday, Treasurer Josh Frydenberg delivered his federal budget with an eye wide open on the upcoming election. From SoundCartel, this is Business Essentials Daily. I'm Peter Letts, filling in for Nicole Goodman. It was a budget focused on easing the rising cost of living, according to Michael Jones, tax specialist and partner at Mazars. Despite a lack of tax and superannuation content in this year's delivery, Michael says budget time is a good chance to reflect on your own finances and have a chat with your accountant about your situation. Michael reflects on this year's budget, particularly as it relates to family business owners and self-managed super fund members. First, as he explains to Nick Schildberger, there were three key cost of living measures announced by the Treasurer.
The first one was a $250 payment to pensioners and welfare recipients. The second key one was a 6-month temporary, 50% reduction in fuel excise to help everybody with their petrol costs. And that'll also flow through to the costs of transporting food and everything. And the third one was a one-off $420 boost to the existing tax offset for low and middle income earners.
I think we're all looking forward to some relief in petrol prices, but can you tell us a bit more about the tax offset?
Okay, well, it's a tax offset, so let's understand it. What does that mean? It means it reduces your tax. So if you haven't got any tax to pay, you're not going to benefit from it. Sounds obvious, but sometimes you got to say the obvious. Also, this $420 is a boost to what's existing. So what it really comes to is a $1,500 offset. And that offset applies for everybody whose taxable income goes up to $126,000. Interestingly, after $126,000, it just stops entirely. So that extra dollar you earn from $126,000 to $126,001 is heavily taxed. And finally, what I'd say about it is that at the end of this financial year, it finishes because it's a temporary measure. So that really means the recipients next year will be paying more tax compared to this year.
So, Michael, what were the business items in the budget that caught your attention?
Interesting for me were the two ways that you can boost your tax deductions that were announced for businesses. Now, these announcements apply if your annual revenue of your business is less than $50 million. These businesses get an extra 20% deduction for the money they spend on external training courses and investment in digital technology. What that means is that for every $100 you spend, you get a $120 tax deduction. Well, that's good, Now, with the training must be delivered in Australia or online, but it has to be done by Australian registered trainers. It's current from budget night through to 30 June 2024. The investment in items that support digital adoption, it's capped at $100,000 a year. One point, for the current year expenditure, the extra 20% gets claimed in the following year. I just think they weren't ready for the tax returns and the legislation to be able to claim it in the current year. So if you're looking for that extra deduction, you won't get it until the 23 financial year. In the 23 year, you'll get it in the year that you spend. The digital adoption measures, they'll apply for the current year from budget night and they'll finish at June 2023. So they're 1 year less than the training measure. I think the point is that in the last few years, businesses have had the ability to get an immediate deduction for equipment investment. This has been a big one, Nick. It's been huge. And if you're profitable, if it's the right for you, you've been able to bring forward a lot of deductions by making significant plant and equipment investment. And it's been happening.
That's the instant asset write-off, is it?
Yeah, which has been getting bigger and bigger each year. That is not mentioned at all in the budget. So that's what I mean, like the tide's turning, those sort of big incentives are being brought back. And another one, the loss carryback rules, no mention of any extension of that in the budget. So really what I think businesses should be looking to see how they can maximise the benefits under these two measures, which will phase out. The instant asset write-off finishes in June 23, so you've got time, but it looks like it's not going to be renewed. And it's a sort of thing that you do need a bit of long-term planning.
There's a brand new podcast series out now called The History of the Australian Startup Ecosystem. It goes right back to the 70s and examines the evolution of the Aussie startup. Guests include Canva co-founder Cameron Adams, former Prime Minister Malcolm Turnbull, and some of Australia's top VCs. We think you're really going to love it. Follow the history of the Australian startup ecosystem wherever you listen to podcasts, and the link is also in the show notes of this episode.
Was there anything else of interest for business?
There was some measures announced that will expand the access to unlisted company employee share schemes. So I welcome any improvement to employee share schemes, but I find, removing regulatory barriers is pretty weak because the biggest problem here is tax barriers. Just quickly, so yes, there's an improvement, but I'm not excited. But the topic itself is of interest because if we get this right, it's a real supercharger for the sort of family businesses and closely held businesses we deal with. Back in 2015, there was very good changes to employee share schemes, and after years and years of lobbying, I think they got it right with those rules, but the trouble is they're only available to a very narrow group of participants, and understanding whether you actually fit the criteria can be quite cumbersome. So I'm still lobbying for more change on the employee share schemes and change that's meaningful, because if we can get real incentives going for the people that are building innovative enterprises, it's great. Importantly, Australia is out of sync with the rest of the world in having a simple and really incentivising employee share scheme rules.
Why is that?
They're not bold enough. Every time they go to the edge, they qualify it with some other restraint, and it just doesn't have the simplicity and boldness you need that says you go for it, and if it takes off, you're going to get a real benefit.
Now, Michael, the ATO Tax Avoidance Task Force will be extended. Can you tell us what this means?
Yeah, well, this is something I think is really important and I don't see a lot of commentary about. So in the budget, there was an announcement that the Tax Office will get an additional $650 million funding the Tax Avoidance Task Force, and that's going to be over the next 2 years till 30 June 2025. Now, from this investment, the budget says they're going to collect $2 billion in revenue. What I'm saying is that we expect trusts and the distribution of trust income to be a significant focus of this task force. And so what you really need to do is to reconsider how you do trust distributions and work with your accountant so that you can manage this issue and intelligently continue to use your trusts in an appropriate way. And if I could summarise the direction I think it's going to go in the end, it's basically going to be where you have a distribution of trust income that is going to a beneficiary, but the cash goes to a different beneficiary, that's going to give you issues. And more we're going to see that the cash needs to follow the trust income distribution. But importantly, have a good conversation with your accountant about what it means for you.
Now, superannuation, Michael, there's been an extension of the temporary reduction in superannuation minimum drawdown rates.
Yep, the government during the COVID, it dropped the minimum pension 50% and it's continued it again. So in a way, this is not an important announcement. It's sort of like continuing a policy that is helpful for people. But again, I think it's an opportunity to have a meaningful conversation with your accountant, so that the question for me is people that are over 60 and have a self-managed super fund, there's real pros and cons about whether they should have a pension or not. I mean, if you take a pension, you're maximising the tax exemptions available in your superannuation fund. So that's good. But it also means that you're draining the assets that are held in your fund. So it's something you need to think about. And if you are somebody who do not need the assets in your fund to provide your cost of living, maybe you're better off keeping more assets in the fund or not. There's no simple answer. It depends on a range of circumstances. But my point is, have a real consideration of what's the most useful thing for you in terms of pension payments and the taxation of your self-managed super fund.
And finally, Michael, how do you sum up the budget for business?
Well, I think this budget is not a lot of exciting things for businesses, but for me it signals the mood of the moment where the tide's turned on business incentives and they're getting phased out. So therefore, business owners should focus on what's still around, like the instant asset write-off and the loss carryback rules, and understand, can it work for them? How can they manage their tax affairs? And, this time of year, it's a good time to be thinking about those sorts of things. And as I've said, the tide has also turned on the tax office view on trust income distributions. So people with family trusts in their group need to understand how are they going to intelligently manage that change. And finally, if you are over 60 and have a self-managed super fund, I think it's a good time to question, is your pension strategy right? Should you still have a pension or should you start a pension? All good topics to have a good conversation with your accountant.
That's Michael Jones of Mazars. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Peter Letts. We'll bring you more Be Daily tomorrow. Follow @Be Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily Podcast.
SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.